uh, an interesting time. What I want to do today is I want to talk about some of the things that you should know about protecting yourself financially through a situation like this. So I'm going to share my screen with you and share a presentation that I put together. And let's go ahead and do that. So 5 things to protect your finances. And again, as Jacqueline said, my name is Ed Hutton. I'm an associate professor of finance in the Niagara University College of Business, and I'm the director of the Financial Markets Laboratory. And I'm also a veteran of a whole bunch of different financial crises. So I'm going to go through and talk about this. These are things that I lived through. And let's get started. Let's talk about what I think is going to be the most important bit of advice that I can give you right now. And that is to stop looking at your online accounts, especially your retirement accounts. For most people, your retirement accounts are going to be the largest financial accounts that you're going to have. And with the way the markets have been over the last 3 weeks or so, it's going up, it's going down, it's going up, it's going down, it's up again today. But I want you to tell you that psychology of looking every day at your accounts is not a useful thing for you to do. There's a whole field of investment psychology that's around emotional investing and the way that our emotions get involved with how we make decisions financially. And what most of the research seems to say, and pretty convincingly, is that when you make investing decisions in emotional times, you're going to make bad decisions. And going back to the time before the internet, the time before we had all this access to our financial accounts, people were used to having to talk to an advisor, having to call somebody up. You didn't have access online where you could see how much it went down every day. And I really think that that's a pretty good idea. And I want you to think about going back to that, because there's a lot of bad information that you can get by looking at your accounts every day. You should have a plan, and that plan that you should have should be an annual plan. You've made the decision for your investment accounts that you're going to contribute a certain amount into your IRA or your 401k, or if you work for a nonprofit, your 403b plan. Stay with that plan. Those accounts don't need you to look at them every day. They should be checked quarterly. They should be checked annually, but not daily. One of the things that I want to do is to give you some historical perspective on financial crises. Since the 1930s, so we've got about 95 years of history on this. There have been 15 bear markets, and we're in right now what's called a bear market. And a bear market is defined as the stock market going down by 20% or more. So we've had 15 bear markets since the mid-1930s. The average decline during a bear market is about 30%. And as of this morning, in this bear market, which would be bear market number 16, we're down just the average. We're down about 30%. Typically, we have a bear market about every 7 years. What was unusual about the last 12 years is that we didn't have a bear market. So we actually, if you are looking at it from a historical perspective, historically, what was unusual was the last 12 years that we've had, where we basically had although growing slowly, we had a steadily growing stock market without a lot of volatility, without this bear market. Well, we tend to regress to the mean. We tend to go back to what's normal, and this is normal. We're in a normal correction that happens. And even with the bear markets that we've had, if we look at the overall return on the markets, going back again to that same period, back to the mid 1930s, we see that the markets give us a return of about 9.5% per year. And that's with those bear markets. So even though it seems very, very scary what's happening, this is part of the normal cycle. It's part of the normal volatility in the stock market. So don't feel that you can get anything or to get any insight by checking it every day. It's just going to drive you crazy. Now, the other thing that I want people to be aware of is that in a lot of times like this is really having somebody to talk to, a financial advisor. And I know that for a lot of people, there's been a lot of talk about, well, you don't really need a financial advisor. You can do it yourself. You can invest in an index fund or what they call a life cycle fund. And that's probably good for some people, but what you're going to find is that a lot of places will have the ability to get a financial advisor, and that may really be something that's worthwhile, if only to have somebody to go over and kind of talk you out of some of the bad decisions you might make. So don't try to go online, check your accounts all the time, and try to make any bad financial decisions. But while I don't want you going online and looking at your retirement accounts, what I do want you to be very, very careful about, and not to scare anybody, but there's some people out there. We all know that there are credit card frauds and there's been data breaches and that sort of thing. And I want people to get in the habit of checking their credit card statements, and those you can check online. So make sure that nothing funny is showing up in your credit card statements. So there's no charges that are being put against your account that you're suspicious about. And what's happening right now in the banks and the credit card companies that do this type of work, they're overloaded. They've got lots and lots of people. And unfortunately, there's a group of people out there that say, this is the time when I'm going to try an online scam. Okay. So what I remember that you don't have to have responsibility for those, but you have to notify the bank, and the banks are very, very busy. So be extra vigilant right now about online scams. Now, the second thing is I want you to, in addition to watching your credit cards, is I want you to watch your credit. And again, if you can't make a payment, if you can't make a mortgage payment, or if you can't make a car payment, or if you can't make a student loan payment, there's something right now being offered, and was just as part of the bill that's going through Congress right now, is something called forbearance. And what the word forbearance means is that you're going to get the opportunity to be able to delay making those payments for a number of months without suffering any hits or any charges against your credit score. Contact your lender, whether it's your mortgage provider or whether it's the person that's providing your car loan or student loan servicer. If you can't make a payment, explain what's going on. They're told now that they have to give you forbearance for that. But if you do go through that situation, check your credit score, check your credit report. And remember, of course, everybody should know this, is that you get the opportunity to do a free annual credit report. Look at that credit report and make sure that you're not being held delinquent. That's part of the law. They can't do that. But there's a lot of stuff going on right now, and somebody may not flip the right switch. And so you'll have to be very, very careful that if you do take advantage of any of these programs to be able to postpone making loan payments, that you're not going to be hurt with your credit. Another advice is, again, go old school with some of your payments. I know that for a lot of people, we've gotten used to this idea that we're going to send all of our money electronically, or that we have automatic deductions. Well, it might be a really good idea for the next few months to go back, or if you've never done it before, try it. Send in your payments with checks, and then that way you can have physical copies of the checks you make, mail it in, make a copy of the checks. Banks right now are very short-staffed, and they've got, as we know, like a lot of us are doing, they're all working from home. They're not set up to work from home, and things are going to fall through the cracks, and nobody should not get credit for making a payment. So go back to the old school, go back to the old method of mailing in physical checks and keep copies of those checks. Those are physical records that you actually made the payments that you were supposed to. Now, if you're in the situation where you need money, and for a lot of us, we're going to be in that situation because there have been a lot of layoffs, that people work in different industries. Those industries have been shut down. There is help that's coming through in the form of loans, in the form of money that's going to be given to each individual as part of this new stimulus plan. But I think people are being over optimistic on how long it's going to take. There's a lot of paperwork, and I know that they've talked about checks going out as soon as 2 or 3 weeks from now. I'd be surprised if it's going to happen that quickly. I think it's going to take more like 4 to 6 weeks for those checks to go out, just because of the magnitude of the paperwork that has to be done. Well, one of the things that's being implemented with this new package, this new stimulus package that's going through Congress right now, is that you're going to be able to borrow from your 401k, your 403b plan, and you can borrow up to $100,000. And don't think that you need to go out and borrow that all at once, but it's going to be a while, I think, before a lot of the stimulus that's being promised kicks in. And you can borrow from yourself from your 401k or 403b plan. That's one of the provisions. I know that it is at Niagara University, and you'll be able to get a loan. And what's nice about that loan is that you pay yourself back. So as you go through, you're putting the money back into your own account. So you can actually borrow against your retirement account and not be forced to have to sell it. I would tell you that cashing in a 401k or an IRA is something that you should try to avoid. However, if the situation is such that you do have to cash in an IRA, that you do have to take some money out, one of the things that's happened is that if you're somebody who's been affected by the coronavirus or the economic slowdown that has a result of coronavirus, is that what Congress has done is that just today is that they are going to waive that 10% penalty that you normally would have taken if you had cashed in an IRA prior to being 59 and a half. So it's now one of those hardship withdrawals. And so it can be a source of cash for you. And especially the laws have changed that said that what you can do is you can take that money out. So let's say you need $25,000 to get you over the next several months. You can take that money out and then put it all back in within 3 years. And so that's an interesting change just today in the laws that we have on IRAs and borrowing from IRAs. Now, the one thing you've got to remember is that when you take a distribution from an IRA, that's going to be taxable for you next year as taxable income. Fourth, there are a lot of new programs, and these programs are coming out quickly. As I said before, there's an 883-page document right now that is this stimulus plan. Most people don't know what it's in it. Even the people that voted to approve it, even unfortunately, a lot of people that wrote it, there's a lot of different things that are in that. And it's really going to be up to you to know what type of aid or assistance you're eligible for. There are new rules on unemployment in New York, new rules on unemployment, new rules for eligibility for unemployment insurance. So if you're what we call a gig worker, so if you were an Uber driver, or if you were an independent contractor, before you weren't eligible for unemployment insurance, and now you are. Small business loans. So there's a small business loan program that says that you can get a loan for up to 4 months of operating expenses plus salary. And at the end of those 4 months, if you haven't laid anybody off, if you maintain your normal employment, that loan gets forgiven. There's student loan forbearance. So you have the opportunity to be able to postpone making any student loan payments for up to 6 months. There's lots and lots of different types of aid that's available in this new stimulus program, but I think it's going to be up to you to be able to find out what it is that you are eligible for. And going back to what I said before, be really careful about people scamming you on things like this. And unfortunately, there are people out there right now who would take the opportunity to tell you that you're eligible for something. That be really careful. Just make sure it's legitimate. And it's sad that people do that, but that's what happens. And finally, not to tell you that you need to, hunker down in a bunker or anything else like that, but just be careful. And I know that for a lot of people these days, people don't have any cash. As I said before, I expect that there's going to be an influx of different types of investment schemes and credit card scams and that sort of thing. You may be a victim of one of those. And I think that we're used to this idea that if we have to get a new credit card or an ATM card, that it might happen in a week or just a few business days. And if we've had that experience, we think, well, that's the way that it is. But with all of the pressures on banks, and like I said before, bank staff trying to work from home, I could easily see it being 3 or 4 weeks before you'd be able to replace a credit card or an ATM card. Remember that retail point of sale systems are just computer networks. They can be swamped. You may find that you wouldn't be able to use a credit card in the same way that you thought. Again, I mean, whoever thought that toilet paper would sell out, but that's something that we all had to look at. ATMs are stocked with cash, and it's not inconceivable that people will worry about that, and that we may find that we need some cash. So again, even though it's going back to the way that it used to be, think about having some cash on hand in a safe place in your house, 1 to 2 weeks for groceries, gasoline, that sort of thing. You may probably never need it, but it's going to be good, like I said, in case we run into an influx of credit card scams and those types of things. Jacqueline, that's what I wanted to cover here. My contact information is here, Ed Hutton, ehutton@niagara.edu, my phone number. And I'd like anybody, feel free to give me a call if you've got any questions about anything, 716-381-1820. Jacqueline, thank you very much. Any questions?
You're welcome. I'm trying to get my face back. I know there was one question, and I actually have one too, Ed. You mentioned,
Sure.
There we go. I'm sure everyone wants to see me, but you mentioned getting the annual credit report. That's free. What are the best websites to go to get your credit report annually?
Yeah, sure. There's a website called freeannualcreditreports.com. And so freeannualcreditreports.com is the official government portal. So you want to be able, there's 3 different credit reporting agencies. You want to be able to check all 3. One of the things that it hasn't been done yet, but one of the things that's most likely going to happen is that they're going to allow you to be able to get that several times. Again, that's one of the things that that is proposed to be waived, so that you'll be able to go online, check your credit report, and make sure. Again, like I said, you've got an opportunity here because of the pressure on the economy to be able to postpone a lot of the payments that you would normally be responsible for. And what you want to do is you want to make sure that if you do that, that you're not reported as delinquent.
Wonderful. Thank you. Evan Pierce had asked when you were talking about risk withdrawing from your retirement accounts, does that include Roth IRAs?
Yes, well, Roth IRAs, yes, and this is another example of one of the benefits of a Roth IRA. So a Roth IRA is money that you've put into an individual retirement account. You've already paid tax on that money. Previously, to be able to access a Roth IRA, Evan, is that you would pay a 10% penalty unless you were over age 59 and a half. And what is in the new stimulus plan being voted on by Congress is that what they would do is they would allow you to take up to $100,000 out of a Roth IRA and not have to pay that 10% penalty. They're assuming that you're under 59 and a half. Now, if you're over 59 and a half, you've always been able to take money out of a Roth IRA without having to pay that penalty. And remember, if you were younger, under 59 and a half, you took it out, unless it was for some very specific examples, you would have to pay that 10%, but that's now being waived. Okay, so you got that, you have that opportunity. And one of the nice things about the Roth IRA is a Roth IRA, you can take that money out, you can use that money as you need it, and because you've already paid tax on it, you're not going to be responsible for tax when you take it out.
Wonderful. Thank you, Ed. Another question too. What's the best way to track down an old 401k account?
Say that again, Jacqueline.
What is the best way to track down an old 401k account?
Well, a 401k account is going to be an employer-sponsored account. Okay, so what's going to happen is that every 401k account is going to have an employer associated with it. And even in a situation, you may have worked for some place 20 years ago or so, your employer should still have a connection with that account. Okay, so I would say the best way to track down a 401k account is to go back to the employer. Remember that these are employer-sponsored accounts, and your employer has a responsibility to you to be able to find out where that money is. So I would say to be able to locate a 401k account, go back and look for your employers that you've had.
And then we have another question. What is better, an IRA or an IRA 401 or a 403B?
Well, those are 2 different things, and they depend on the employer. Okay, so a 401k is for a for-profit corporation. A 403b is for a nonprofit corporation. For example, Niagara University. It has a 403b plan. And by the way, if anybody wonders where those names come from, not that I read the tax code all the time, but if you did read the tax code, where you'd find the rules is in section 403b around IRAs, around 401ks, that would be section 401 subparagraph K. That's just where those names come from. And so those are both 2 different types of retirement plans based on whether or not you work for a for-profit institution or a nonprofit institution. Now, I also want to say that in addition to employer-sponsored plans, that you also have individual plans. So even if you work for an employer that doesn't offer a 401k or a 403b, you as an individual can open up your own plan, and that's known as an individual retirement account, an IRA. And subject to some limitations on the amount of money that you can put in, you can have both. You can have both an IRA and a 401k or a 403b plan.
Thank you. I can unmute some people. Again, I'm still new to this, so I don't want people not to be able to ask their own questions. People have just been submitting them, and I apologize, I'm asking them for you. So we have a 3 or 4 minutes left. Maybe I should have muted everyone. Yeah. Never mind. I will allow you to unmute yourself. There we go. So if you want to unmute yourself and ask Ed a question, you're welcome to, or feel free to send them in the chat, as we have about 3 minutes left. Oh, I have 3 new messages. I apologize. Is the 10% penalty withdrawal you're referring to listed under a hardship withdrawal through 401k, or is it a different new option they would have to withdraw money? Did I lose you, Ed? Oh, I'm sorry, Ed.
How it's going to be listed.
Sorry, I accidentally muted you. I apologize.
Oh,
so at least I didn't hear you. I'm sorry.
Oh, okay. Okay, great. So let me start over again. So yes, let me explain that there's something called, there's always been something known as a hardship withdrawal. And a hardship withdrawal typically was a set of different life events where they would allow you to take money out of an IRA or a 401k or 403b plan, not being subject to those penalties. And that was, for example, if you had to pay medical expenses, you could get what's called a hardship withdrawal and you wouldn't be subject to the 10% penalty. What is happening right now as part of this new stimulus plan is that those sections, they were called Section 72T of the tax code, those are being amended right now so that if you're someone who is affected by the coronavirus, and it's interesting the way that they've structured it in the law. They say that basically as long as you say you were affected by the coronavirus, we're going to believe you. We're not going to check on you here. So basically, as best that I can tell by reading the proposed legislation, they're saying if you're affected right now and you need money out of your 401k or out of your IRA, and again, you don't fit into one of those hardship withdrawals, but now you have the opportunity to be able to withdraw not an unlimited amount, but up to $100,000 and not have that subject to those 10% excise taxes.
Wonderful, thank you. Another great question. Where are some places you look to track the market, Ed?
Well, you know, what I like to do is, for me, and it's exactly what I do with my students, I tell my students that I want them to start reading the financial press, but recognize that you never want to read just one newspaper or one news source. So what I like to do is I like to have my students read the New York Times and the Wall Street Journal and Barron's. So those are between the Wall Street Journal and the New York Times. Well, they're very different. They have very different takes. One is a more liberal type publication and one is a more conservative type publication. And I tell my students, read both. Read both. Follow the markets. Follow the markets. And again, don't go to the spot where you figure you need to go looking at your account balances all the time, but be actively involved in the markets and take financial news. Take financial news. I find the Wall Street Journal to be very, very interesting. I like Barron's for a weekly perspective. That's a weekly newspaper. And since you got a lot of time right now, those are good things to read.
Wonderful, thank you. We've hit our 2:30 mark. Is there any last minute questions? Ed, you've received so many wonderful thank yous for the opportunity and just your insight and your knowledge. And I know on behalf of myself and the university, we're so grateful that you've been able to take the time. I know you're getting back to moving into online classes next week, so.
That's right. Yeah. So that's right. So yeah, I'm looking forward to that. I'm looking forward to that. It's great reconnecting. It's great reconnecting with my students.
Wonderful. And for those that are joining us too, if you haven't seen, we will be continuing all of these sessions as we move into this kind of virtual world. It's been something on the alumni team's to-do list for a while, but when we're at events, we can't seem to get to these virtual things. Tomorrow we have one on wellness at home. So if you're at home and the gyms are closed or you have kids and nutrition, Katie Virtue, who's a class of 2007 alum, will be presenting from 12 to 1 tomorrow on that topic. Next Thursday, we are hoping to do a Q&A with our athletic director, so stay tuned for that. Next Thursday night, we will have a session on your personal and employer branding on LinkedIn with Claire Petrie and Dan Schlein. Sorry, Dan, if you're on here and I mispronounced your name. And then the following Friday, April 3rd, we will be doing one on communication and its new perspective and 5 different ways you should be communicating right now in this new normal. So everything you can find is on niagara.edu/virtual alumni. And I will continue to send out emails to everybody with those topics. Someone says to sign up for the wellness session if you want, you could just go right to that website. Or Jennifer, I can just message you afterwards as well, but I will put the website in. And all of them will be used right on Zoom too. Any last minute questions out there? Ed, thank you so much again. We really appreciate it. We'll hopefully see you back on campus soon. It's nice to communicate this way. And for anyone chiming in today, we really appreciate it. Thank you for all of your support.
Yeah, thank you. Thank you, Jacqueline. Thank you, everybody.
You're welcome. Thanks again, Ed.